All right, good morning, guys. Hope everybody can hear me okay. I'm going to go ahead and mute everybody as best I can. And I'll open it up for questions at the end.
Well, let's go. What else do we have to do? It's time we'll start this.
Okay, looks like we're good. All right, guys, today we're going to be talking about National General, all right? Going to go into who Natgen is, how they, came about acquiring such a large footprint in the individual health insurance market. We're going to go over the quoting site, talk about how to run quotes and how to build plans. We'll go over products, and then I'll give you guys, my 2 cents on when I go with Natgen and when I sell National General, because everybody knows how I feel about Philadelphia American being, my main go-to. So when would I sell a National General, and where do I think the products fit in to, your marketing strategy? Again, assuming, Philadelphia is your primary place. So some of you, some agents I know National General is their primary play. So let's get into it. All right, guys. So once you get your writing number, the website is quote.nationalgeneral.com. It's going to bring you to a login page. If you haven't registered yet, you'll need to register before you can log in, just like any other website. So go ahead and get yourself logged in. And it's going to, this is just, their MedSup program is starting to catch some traction. So they're going to go ahead and, give you a little advertisement up front on the MedSup. But once you typically log in, this is where you're going to be. Okay. This is actually, and maybe some of you have some experience with Quote-it. Quote-it is a quoting platform in the individual health insurance market that National General actually acquired. So now whenever you quote National General products, you're using the Quote-it platform. So here's the home page. All right, guys. First of all, let's talk about National General real quick and who National General is. A lot of people that are buying their individual health insurance still haven't heard of National General. And with the new regulation coming out for 2020 that states that employers either have the option to continue to buy the group plans as they have for their employees, or they could give an employee up to $1,800 a year, and that money can only be used to go buy individual health insurance. So, you're going to come across it where people are going to say, well, I've never heard of National General in terms of health insurance. People that are used to Blue Cross and United Healthcare and Aetna and Humana and those big name brands when it comes to health insurance. So who is National General? National General was founded in 1920 as an auto insurer. Okay, they started out in the P&C world. They were originally named GMAC Insurance Group. And I've dropped that name sometimes when I'm selling National General because a lot of people have heard of GMAC, right? I used to have an auto loan through GMAC. Well, National General used to be GMAC Insurance Group. They had a lot of success in the property and casualty world. They saw an opportunity to get involved in the individual health insurance market in the Obamacare era. So once Obamacare came about, they thought it would be a good idea to get into the individual health insurance market. Now, when you're already a multi-billion-dollar company, the way you get into a space is not the way that we do, right? AHBT, we start from grassroots, ground up, and we start building, right? Well, when you're a multi-billion-dollar company and you want to break into a space, all you got to do is throw some money around, go buy some successful companies. So one of the companies they bought was Assurant Health. Okay, so maybe some of you have heard of Assurant Health. Believe it or not, National General is the old Assurant Health. They bought Assurant Health. They bought VelaPoint, which is a health insurance call center. They bought Healthcare Solutions Team, which is a career brokerage like us. they bought AHCP, which is another health insurance distribution. So National General, wanted to break into the health insurance market. They went out and they spent some money and they bought some successful distributions and a large block of business being Assurant Health. So understand, National General Health Insurance Company is really a company that is 5 years brand new, right? And they're already doing over $1 billion a year in premiums. So I mean they've built pretty quickly, So anyway, that's who National General is. All right. So if somebody says who's Natgen, they were a PNC company in 1920. They made some very large investments, to the tune of almost $1 billion to break into the individual health insurance space back in 2014, 2015. And they purchased a company called Assurant Health, right? Which a lot of the self-employed customers that you deal with will certainly have heard of Assurant Health in the past. Another good thing you can do, just while we're on this topic, somebody says who's National General. Another name brand you can drop is the Aetna PPO network, right? They use the Aetna PPO network. When they get their National General insurance card, it actually has the Aetna logo on it. So, pretty cool for some name brand recognition anyway. So that helps out. So anyway, that's Natgen. Okay, that's who National General is. And this is obviously the quoting platform when you're getting started running a quote. So real quick, guys, I'm going to go over some products. Okay, I just want to go through the basics of the products. Then we'll talk about, when to sell Natgen, and then I'll show you guys how to sell it. But getting into products, first of all, the core product that National General, their claim to fame in the individual health market, if you will, is their short-term medical, okay? They've got one of the most competitive short-term medicals on the market. You guys have maybe heard me say this in the past. Our short-term medicals that we offer act as real major medical policies. Okay, so there's a lot of short terms out there today with IHC, with HII, that claim to be short-term major medical policies, but when you dig into these policies, they're actually limited medical plans. So now you imagine, selling a Philly plan that has an expiration date. I mean, that's what HII is ultimately. It's a scheduled benefit plan. All right. So National General works like a major medical, their short-term med product. Okay. And UHC's short-term med, same thing. We're going to be training on UHC next week, updating our UHC training for our university. And that short-term product is also a major medical short-term product, right? So National General, short-term medical, one of the best on the market, one of the only real short-term major medicals on the market, okay? Talked about the Aetna network and the fact that they use the Aetna PPO network, okay? And here are some of the highlights of the benefits that are included in the plan, okay? So you got the Aetna PPO network. You guys should all, know where to find that website to be able to shop doctors and hospitals. And I'm just going to show you real quick. It's in the quick links of LeadMaster. You can go to the Aetna PPO network right here. If somebody's asking about if their doctor is accepted by the Aetna PPO network, you go to the quick link, open it up. It should be working. I already have it open. I was shopping it yesterday. Anyway, that should be working. I don't know why that's not working. I'll have to get that fixed. But here's the link too. All right, the Aetna network. Okay. So if you go to the Aetna network, the one thing you want to make sure, I just want to show you guys this real quick so you know what to shop. So you can go ahead and put, whatever zip code in for your customer. You want to make sure you choose the open choice PPO when shopping doctors and hospitals, okay? So it's the open choice PPO network, okay? So that's the only thing I wanted to show you on this. Otherwise, it's pretty self-explanatory. You put the zip code in, you put the open choice. You can put, urgent care, primary care, hospitals, and it's going to start to give you a list. If you know the doctor's name specifically, you can stick it in there. All right, and it's pretty easy to shop. Okay, so PPO network, Aetna PPO networks, huge selling point for the Natgen short term. Some of the other plan highlights and benefits that are available. Again, this acts like a true major medical. So when we get into the quoting platform, you're going to see that we're going to select a deductible amount, and pretty much everything is going to be subject to that deductible under this plan, okay? With the exception of urgent care visits, okay? So you get urgent care visits at a copay of $50, okay? You pay, the way it works is you pay a $50 copay, and then anything over and above that $50 copay is going to be covered with the plan coinsurance. Okay, so if the plan coinsurance is 80/20, you pay $50 copay when you go to the urgent care, and 20% of the remaining bill, right? If it's 70/30 coinsurance, you'd pay 30% of the remaining bill. That's how the urgent care benefits work on this policy, okay? So $50 copay, and then you go into the coinsurance. In other words, the deductible is waived for urgent care visits, okay? Emergency room, you get unlimited visits. It's all subject to the deductible and coinsurance. You do have a $250 access fee when you go to the ER. So that's an access fee, right? So if you think about, with the Natgen short term here, you walk into the emergency room, you've got a $250 access fee before you're even seen, right? Just the opposite with Philadelphia American, right? You walk into the emergency room with Philadelphia American or a limited med plan, and you get the benefit, right, before you're even seen. So this is an access fee. So don't confuse copays with benefit with now access fees, okay? So it's a $250 fee, when you walk into the emergency room. And then everything else is subject to the deductible and coinsurance. That access fee is waived if you are admitted into the hospital, okay? The ambulance service is a $250 benefit per trip, okay? Which is usually gonna be enough as long as you're traveling a short distance. Doctor visits are all subject to the deductible and coinsurance. So again, guys, it's a standard major medical plan. You've got a deductible. Everything is subject to that deductible with the exception of the urgent care visits. All right, and then once that deductible is hit, you go into your coinsurance. Once your maximum out of pocket on your coinsurance is hit, then you're covered 100% up to $1 million or $250,000, depending on the benefit level of the plan that you choose. All right, so most deductible options, as you're looking at this, most deductible options are going to have $1 million per term maximum, all right? Per term being a 12-month short term, a 6-month short term, whatever your term is, you have $1 million worth of coverage for that term, for that block of coverage. And you'll have that on the, all the coinsurance, the 80/20 coinsurances and the 100% coinsurances. If you choose a 50/50 coinsurance, the maximum coverage per term is $250,000, all right? So I would stay away from the 50/50 coinsurance, again, if you're selling this to a customer as a major med plan, right? Most people are gonna want the $1 million as opposed to $250,000, all right? So just keep that in mind that if you're selling a coinsurance of 50/50, you're not giving them $1 million in coverage, you're giving the customer $250,000, all right? There's also, some states are gonna have guaranteed issue short-term med policies. If you sell a guaranteed issue short-term med policy, it's a $100,000 maximum, okay? And it doesn't cover pre-ex either. It's just guaranteed issue, and it will cover everything outside of, whatever pre-existing condition you have that led you to getting a guaranteed issue plan in the first place, all right? So a GI short-term plan, good to bridge the gap, right? Truly is a good thing to bridge the gap. Probably not the best option for a customer for long-term, somebody needs a GI plan, I say this all the time, the best option for them is the marketplace, okay? The guaranteed issue plans outside of the marketplace are never going to be as strong as the marketplace plan. So always do what's best for your customer, even if you're not selling on the marketplace, okay? If you choose not to sell on the marketplace, we could talk about you kicking that lead over and getting a referral fee later on. We'll talk about that. But there is a GI plan available, okay? And if you come up with somebody who really truly needs to bridge the gap for 3 months or 4 months or 6 months, and they've got their insulin-dependent diabetes, you're not going to get them through on the standard issue plan. If they have a GI plan available, it's still something is always better than nothing, right? So again, here, just kind of going over, what is covered. The things that you would expect to be covered are covered. Doctor visits, urgent care, ambulance service, emergency room, diagnostic testing, mammograms, cancer, testing, radiation therapy, chemotherapy, surgeries, inpatient, outpatient, hospital confinement, physical therapy is covered, skilled nursing is covered, child immunizations, and transplant benefits, okay, all covered, right? Again, major medical. What's not covered on these plans? There's no prescription coverage, okay, no prescription coverage. There's no vision coverage, okay? Pregnancy is not going to be covered, and pre-existing conditions are not covered, okay? So again, it's not for everybody. It's for healthy people. Healthy people that don't want to have babies, aren't taking medications, have no pre-existing conditions. Now, again, with Marty the drug guy, being that you guys, those of you that were on the meeting this past week, Marty the drug guy, Marty the drug guy is a beautiful tool to have when marketing national general plans that don't cover prescriptions. Right? So you always have that in your back pocket. And the fact that prescriptions aren't covered on this policy has never, stopped me from closing a customer on it. I mean, that's the truth. Again, these are for healthy customers, so they shouldn't be an issue, okay? Talking about out-of-pocket costs, we're gonna go into the supplemental coverages that are available in a minute. There's a life membership. It's $20 a month. It's included in the premium when you quote somebody. So if you sell somebody a $200 a month short-term medical, $180 of it is actually the premium. $20 of it is for their life membership, and that's going to give them a discount card for prescriptions. And customers are going to ask. Customers are going to say, "What's this $20?" Right? Well, again, when you run the quote, you're including that in the premium, okay? And it's basically just the association that they need to be a part of in order to have the policy. But what that association will come with is some, different prescription discounts, identity theft coverage. There's gym membership discounts, things like that, and then Teledoc, which is very important. And I was mentioning this in the office yesterday. Teledoc is one of the best features to all the health insurance plans that we market that, as an agent, if you're not pinpointing Teledoc and using that as a selling tool, then you definitely need to. You should be, all right? Because Teledoc it's the future of healthcare, right? Virtual doctor's appointments within 5 minutes. How many of you have kids or have had small kids, and when they got sick, you could diagnose them? You didn't need to call the doctor, make an appointment, go to the doctor's office, fill some paperwork out in the waiting room, be called, tell the doctor the symptoms, have the doctor tell you that you knew exactly what was wrong with the kid, get the prescription, go to the pharmacy, fill the prescription, and get the kid home to rest, right? How many times? I went through that as a kid all the time, right? Now, you just pick up the phone, you do the doctor's visit over the phone, they call the prescription into your local pharmacy, and you're off and running. It's a hell of a time saver, right? So Teledoc is a great feature, again, offered in all the health insurance policies that we market, okay? Limitations and exclusions, I'm not gonna read this, but it's what you would expect. The big things are what we went over. It's not gonna cover pre-existing conditions, not going to cover, it's not going to cover treatment for drug abuse or alcohol abuse. It's not going to cover pregnancy. It's not going to cover prescriptions. All right, you guys can go ahead and it's not going to, you know, you guys can go ahead and read this. Anyways, there's the typical limitations and exclusions that you would expect in an off-exchange health insurance policy. Okay. So guys, that's, you know, short term is real simple. I like to keep it real simple. There's not a lot to it. You just got to understand how a major medical works, right? And the fact that everything is going to be subject to the deductible and co-insurance with the exception of the urgent care visits, okay? So that's the only benefit they get. They get an urgent care copay of $50. Everything else is subject to the deductible, okay? Which is why if selling National General, you're inevitably going to sell some supplements, right? You're going to sell some supplements to cover that deductible and that out-of-pocket. So one of my favorite supplements I'm going to talk about right now is the Plan Enhancer. It's still called the Assurant Plan Enhancer, all right? It is the AME, the accident medical expense for National General, all right? So the Assurant Plan Enhancer, it's my favorite supplement probably across the board, all the carriers combined, and I'll show you why I love it so much. But I'm going to go right into the examples and the benefit levels because it's really explained much easier when going into the examples. The first thing that a Plan Enhancer policy is it's an accident medical expense, okay? So that's the first benefit you're going to get with a Plan Enhancer is an AME policy. All right, you can choose a benefit level of, I think it's up to 7,900 now. We'll look at it when we get to the quoting platform, but I think 7,900 is the highest benefit level. Now, in every year, the maximum, what that does is it mirrors the maximum out-of-pocket on a marketplace plan. So in other words, marketplace plans, they, you know, started out with a $6,000 maximum out of pocket. That's the most they could have out of pocket. Then they went to $6,850. Then they went to $7,150. Then $7,350. Now I think it's up to $7,900, and it might even be going up to $8,100 or $8,350 for plan year 2020. If that happens, the Plan Enhancer benefit will mirror that. Okay, so you could sell a Plan Enhancer benefit of $5,000, you know, or you could sell a Plan Enhancer benefit of up to $7,900, all right? But it's set, those benefit levels are set there in order for you to be able to cover the out-of-pocket maximums on the major med that you're selling. In this case, the short-term major med with National General. All right, so let's just say you have a $5,000, the example I'm gonna use straight through is a $5,000 deductible plan with 100% co-insurance, okay? So a $5,000 deductible plan with 100% co-insurance means once the customer pays $5,000 in bills, they're covered 100% up to $1 million, right? So what I'm gonna do is I'm gonna match that with a $5,000 Plan Enhancer benefit, okay? I already get the accident medical expense benefit included in the Plan Enhancer. How does an accident medical expense work? An accident medical expense will pay out up to $5,000 for covered accidents and injuries. So now, if you have a $5,000 deductible and you have a $5,000 accident medical expense benefit, what is your maximum out of pocket for accidents and injuries? Okay, the answer is $250. Okay, there's a $250 deductible on the Plan Enhancer policy, okay, which needs to be paid in order to unlock the benefit to cover your out-of-pocket on your major med. All right, so, you know, using their example, okay, Mark was painting and fell off a ladder and broke his hip. He had, the total cost was $12,900, okay, so he broke his hip. He had a bill for $12,900. He, his major med health insurance paid $63.23 of it. Okay, so whatever the deductible was, or maximum out of pocket was. You know, it was, here, do the math, 63, 12,923. 12,923 minus 60, 12,923, fat fingers, minus 6323, 6,600. So so $6,600 was the maximum out of pocket on Mark's major medical. Okay, so he's got a bill for $6,600 now. The major med plan picked up $6,320. The plan enhancer kicks in. Okay. And is going to, assuming you have a benefit of $6,600 on your plan enhancer, okay, you're going to have, the plan enhancer will then pay out $6,350, okay, so they're going to pay everything minus the $250 deductible on the plan enhancer, okay. So again, that's a long explanation. When you're talking to a customer, you tell them like this: your maximum out of pocket on this plan for accidents and injuries, $250. That's how you tell them, okay? There's two riders that can be sold in conjunction with the accident medical expense on the plan enhancer. The first rider is a cancer, heart, stroke rider, which will pay out in the event of cancer, heart attacks, strokes, up to the benefit amount. There is no deductible on the riders, okay? So no deductible on the riders. If, let's see here, following a routine colonoscopy, Oscar found out that he had colon cancer. After a year of treatment, his medical bills really added up. He had 14 grand in total cost. His major med plan was $74.19. That same $6,600 maximum out of pocket on his major med. The plan enhancer is going to pay all $6,600 of it, okay, for that when you have that rider. So no deductible. So their out of pocket is zero, okay? And the way you sell that to a customer is your out of pocket on this plan is zero for cancer, heart attack, and stroke. And you're covered up to $1 million, okay? 100% coverage when you build the plan that way for cancer, heart attack, and stroke. I personally do not, I never sell the cancer, heart, stroke rider with the plan enhancer. I never do, okay? I like to sell the critical illness or the cancer, heart, stroke policy standalone, all right? I like to sell it standalone because I want to give them more coverage, you know, than the $6,600 that's available in the plan enhancer. I don't just want to cover the costs of their out-of-pocket expenses on their health insurance plan, but I want to give them 90 days worth of living expenses, all right? So I like to sell a critical illness or a cancer, heart, stroke policy for $30,000, $40,000, $50,000. So what I'm doing now is, yeah, I'm covering the $6,600 out of pocket on the major med, right? But I'm also putting some money in their pocket so they can pay the bills if, God forbid, that heart attack's going to keep Joe the plumber out of plumbing pipes for a while, and he's not going to be making money for his family. Okay, so that's, I never sell the cancer, heart, stroke with the plan enhancer, but that rider is available, and you'll see it come together in the quoting tool. This rider I love, and I sell it with every single policy. So this rider here is called the sickness hospitalization rider. Okay, and it will activate the plan enhancer benefits upon being hospitalized for any sickness or illness. Donna was admitted into the hospital with pneumonia, okay? She had a bill of $9,300. Her major med plan paid $2,700 of that because she had a $6,600 maximum out of pocket. The plan enhancer with the sickness hospitalization rider kicks in and pays the $6,600 in full, no deductible. So when we build the plan, we'll put it together, but now you can sell a National General major med plan. Let's use the $5,000 100% coverage after that as the example. And then you sell a plan enhancer benefit with the sickness hospitalization rider. Now, their maximum out of pocket for any accident or injury is $250, and they are covered 100% with zero out of pocket upon being hospitalized for any sickness. So when do they have to worry about their deductible? Outpatient stuff, right? Unless it's an outpatient surgery brought on by an accident or injury, right? Then the maximum is $250, right? Or an outpatient injury that they're in and out of the ER for, the plan enhancer will kick in, their max out of pocket is $250. I think you guys get the point. But I love this plan enhancer policy with the AME and the sickness hospitalization rider, okay? It's a very, very strong presentation when you can tell a customer, here's major medical with a max out of pocket of $250 on accidents and 100% coverage for hospitalization. It's what you get insurance for, not the stuff you can pay for, the stuff you can't pay for, right? So it's a strong presentation. So that's the plan enhancer. I love this policy. If I'm selling marketplace plans or Natgen Major Med, I'm putting a plan enhancer with sickness hospitalization on every single one of them. All right. Critical illness, I don't think we need to spend a lot of time on this product. Everybody knows what a critical illness policy is. You all understand the importance of a critical illness. You understand that critical illness is sold on emotion. Everybody should have a critical illness policy across the board, and that just comes down to educating your customers on why it's important. All right, and at the very least, you want to make sure that you get the breadwinner a critical illness policy, okay? Not to say that the breadwinner's life is the only one that's important, but the point being, if the breadwinner is not working due to a critical illness, that family is going to need some money, right? And I'm sure they have life insurance on the breadwinner. 79% of the cancer cases that are caught in stage 1 and 2, people survive these days, okay? So, 50% of all people are going to have a critical illness. So it's not a matter of if, but when, right? And the famous line, Mr. Jones, when that day comes, would you prefer that I send you a get well card or a check in the mail for $40,000? I have yet to hear anybody say, send me the get well card. All right, so that's critical. I mean, critical illness, pretty straightforward. You guys will see the benefit amounts to the critical illness when we get into the quoting platform. But, it's a benefit that is, again, paid to the insured. It's not paid to the doctors and hospitals. It's paid to the insured, and it can be used for anything. It can be used for medical expenses. It can be used for mortgage, car payment, utility bills. It can be used for anything, okay? And these are the critical illnesses that are covered, which is pretty standard across the board with, the various critical illness policies that are out there, all right? Critical illness, very straightforward, okay? But Natgen does have it available. Now, National General's, another supplement that they have available is the TrioMed, okay? The TrioMed policy. Now, the TrioMed is an accident medical expense, same exact thing as the plan enhancer, okay? Works the same way, $250 deductible, okay? And a critical illness policy built in, okay? So it is an accident medical expense and a critical illness policy, okay? And it's a great plan. I mean, and I know a lot of agents that sell the TrioMed, they go the TrioMed before, as their go-to. They'll sell the short-term major medical with a TrioMed, right? So they're covering the out-of-pocket expenses on the major medical for accidents and critical illnesses, right? So it's a great plan, and you can, that's what you're going to accomplish by selling it. What I like to do is, again, I like to sell the plan enhancer with the AME plus sickness inpatient, right? So I'm covering them fully, almost fully for accidents and injuries, and fully for being hospitalized due to a sickness. Then I want to get them a standalone critical illness on top of it with a hefty benefit. Okay, so they have some cash flow. They have some cash to put in the bank when, God forbid, that day comes. All right, that's how I like to build the plans. I'll show you guys that in a second here when we get to the quoting tool. but I want you to understand these products, right? So Triomed is just an accident plan and a critical illness plan combined, okay? And you can play with the benefit levels a little bit when you're running the quotes on the platform, okay? They've got some other products too, like, we'll go to it right now. Got some other products too, like they have a limited med plan, okay? It's crap. There's no need to sell a National General limited med plan when you're armed with Philadelphia American or UHC's limited med. The Natgen limited med doesn't even come close. They're not fighting for that market. They're fighting for the short-term market, okay? They've got a cancer, heart, stroke policy, which we'll see some places are critical illnesses available, other places a cancer, heart, stroke policy. They've got an indemnity accident benefit as well that will pay out, certain amounts for certain accidents or injuries. So they've got some other policies available. I'm just showing you guys, what I think is the strongest bundle to sell and how to sell it. So let's go with Florida, Tampa. Okay, so zip code goes in. Demographic information is going to come up next. Primary applicant, female, 1920x1080, non-tobacco user, spouse, male, 1920x1080, and let's give them a son, 2015, okay? Whenever running a quote, okay, for the short term, it's going to automatically default to the longest short-term option available. So, I was asking a couple of partners this week, I said, am I doing this Natgen training a little prematurely because Natgen is going to be coming out with some new short-term products in a couple of, states. So we're expecting to see possibly some co-pays on the plans, possibly some 3-year options on the plan. So, again, just as long as you guys stay plugged in and you, are talking to your leaders regularly, and checking your emails for your business, you're going to know when those new plans come out, and we will obviously make it a point to discuss that at length on one of our sales meetings. But it's automatically going to default to the longest short term. In Florida, you can sell a 24-month block of coverage, okay? And the way they do it is it's 2 12-month policies combined. So you have your first year policy, and it's guaranteed renewable for your second year policy. After the second year, or whatever the longest term is in the state that you're selling in, after the term is up, it has to be re-underwritten, okay? So let's go and build a plan for our family in Tampa here. Now, right away, it's going to bundle some stuff for you right away, okay? You can customize your bundle, okay? This is actually Rich's platform. So, here's the bundle that Rich likes to sell. Short-term 5K 80/20, an Essentials Plus PPO, the plan enhancer with the sickness hospitalization, covering the deductible, and a $25,000 critical illness. Pretty good bundle, right? That's probably what I would do. So, but let's go ahead, and if you ever want to change that, you can change that, okay? You can customize your own, or you can change whatever whatever customization you originally choose. So the way you'll do that is come up here and go to See All Plans, okay? Let's see all the plans that are available in Tampa. So we've got short term, we've got dental, we've got fixed indemnity, that's limited med. Medicare supplements are available in Tampa. You got accident, a lot of accident options. That's your plan enhancer. As I said, there's an indemnity benefit here, an accident indemnity benefit. You guys probably will very rarely sell that. But you have your plan enhancers, and the reason there's so many is because, the different benefit levels, 2,500, 5,000, 6,850, and all the combinations of each. So you can choose a $5,000 plan enhancer with just AME, or you can choose a $5,000 plan enhancer with AME and sickness hospitalization. Okay, so a lot of different combinations to the plan enhancer. Critical illness, you can see, is not available in Tampa. No critical illness plans available in Tampa. Okay, so there are cancer, heart, stroke plans available in Tampa. Okay, 25,000, 30,000, 50,000, 75,000. Much better to sell a customer a standalone cancer, heart, stroke, or a standalone critical illness with a heftier benefit. You know, it's good to, you know, cover the out-of-pocket costs on the medical expenses on the policy, but you know, the real goal of a cancer, heart, stroke policy or of a critical illness policy is to provide some income. So, you know, so they're not taking a huge financial hit when, you know, when the big one happens. Anyway, all right, so let's build a policy. Let's make it make sense for everybody. You've got your deductible options, right? You got a $2,500, you got a $1,000 deductible, you got $2,500 deductible, you've got $5,000 deductibles, you got $10,000 deductibles, you got $25,000 deductibles. Okay, so you can dance with, you know, any level that you need to. All right. I do 5,000, 80, 20 most commonly, but for this example, like I said, I'm going to do 5,000, 100%. So $5,000 deductible, 100% coverage after that, $546 for the family. Okay, it's a little cheap. It's a little more expensive than limited med, right? It's major med. All right, so that's the short term 5,000 deductible. Now I'm going to come over to my plan enhancer, and my goal is now to cover the entire out of pocket on the major med plan. For accidents and injuries, I'm going to accomplish that with a plan enhancer right away because they all have AME, right? But I also want to cover that out of pocket on their major med with for being hospitalized due to a sickness or injury, right? So I come down here and I'm going to find my $5,000 plan enhancer AME plus sickness hospitalization, and that is not there. 5,000 AME plus sickness hospitalization. This would be what I'm selling to this family. I'm going to add that. Just with this policy alone, just the bundle that I've built right here is a major medical plan for 2 years with $1 million annually worth of coverage per person. They get $50 copays to the urgent care. Their maximum out of pocket is $250 for an accident or injury. They have 100% coverage for being hospitalized due to a sickness, okay? And everything else is subject to a deductible of $5,000. And that's how I present it, just like that, okay? Oh, by the way, it is the Aetna PPO network, one of the largest in the country. That's how I present it, bullets, okay? So that's the bundle that we built so far. What else do I want to get them? I want to get them a cancer, heart, stroke. Now, if the critical illness isn't available, the critical illness is going to cover more instances. Okay, the critical illness policy will cover more than just cancer, heart attack, stroke, right? But if it's not available, don't feel bad about just selling a cancer, heart attack, stroke policy because 85% of the critical illnesses are one of three: cancer, heart attack, stroke. Those are the big ones, all right? So for this family, I want to do $30,000 cancer, heart, stroke policy. And the total due today is $668. So the monthly premium, I believe, is $618, right? It's a $50 app fee or a $35 app fee. Oh, it's lower now, huh? $35 app fee. So $668 minus the $35 would be the monthly premium. So this would be the proposal that I would pitch, okay? And the way I present this, Mr. Jones, this is a $5,000 deductible major medical plan. You'll have $50 copays to the urgent care. In the event of an accident or an injury, that deductible is going to be paid for you. Your maximum out of pocket is $250. In the event of being hospitalized due to a sickness, that deductible is going to be fully paid for you. Your out-of-pocket is going to be zero. All right, and I've included a cancer, heart, stroke benefit that will pay you directly in the event of being diagnosed with a cancer, heart attack, stroke. They're the three most common critical illnesses that you could be diagnosed with. And the truth is, 50% of all people are going to experience it. So when that day comes, you're going to get a check for $30,000 in the mail. All right, that is money you can use to pay the mortgage, pay your car note, pay this, pay that. The doctors and hospitals will be taken care of with your major medical plan. Okay, and the premium today is $668. The initial investment is $668, and then it is $633.63 per month moving forward. $633.63 per month moving forward. All right, and that's how I present it, right? And then you dance from there. Customer asks questions, you answer them, right? But you present it in a very straightforward, bundled package, right? I'm doing a lot of training with new agents now, and I hear myself, saying all the time, sell it as one package, okay? When a customer agrees to a price, okay, let's say Mr. Jones agrees to the $633 a month for this plan, okay? And I'll go ahead and sell them and close up the deal. And at the end, I'm going to tell them, now just so you understand, this is 3 policies bundled together to make one great health insurance plan. It will be reflective, that will be reflected on your bill, on your statement. You'll see 3 different drafts totaling the total cost. What I've found is customers will never sacrifice coverage after agreeing to a price. They're never going to sacrifice coverage after already agreeing to the price. But if you sell it to the customer like this, here's a major medical plan with a $5,000 deductible. I'm going to go ahead and add into it an accident medical expense plan, which will pay the deductible in the event of accidents or injuries or being hospitalized for any illness. I'm also going to go ahead and add a cancer, heart, stroke policy. When a customer hears that and then you give them the total price, now they're saying, okay, let's look at it now. Do I need this? Do I need this? Do I need this? Why don't you just go ahead and give me the straight major med plan for $546 and we'll call it a day, right? When you break it down individually, they will sacrifice coverage to get a lower premium. When you sell it as a bundled package, they're not going to sacrifice coverage on a price that they already agreed on. Does that make sense? Okay, so a bundled package. All right, now we've built the package for our customer. We've presented it to them. We've asked them to go ahead and get enrolled. Let's see if we can get you approved. That's the close, by the way, guys. Okay. Never taking an application, never filling out, signing up. What you want to tell them is, Mr. Jones, let's go ahead and see if we can get you approved. Let's see if we can get you approved for this plan. All right. Very simple, smooth. Let's go ahead and see if we can get you approved. All right. Now, let's say they turn me down. Well, I want to see it in writing. No problem. I'm going to create the proposal, right? And this should be very self-explanatory, but we're going to go over it. Customer says, yeah, let's see if we can get you approved. Enroll now. And we'll go look at the application in a minute here, but we're going to enroll them. Otherwise, we're going to create the proposal. Okay. We're going to create the proposal and we're going to email it to them. Okay. Real simple. Guys, I didn't have these luxuries when I first started selling health insurance over the phone. Now you got all these nice portals that send out these nice quotes and nice formats, all compliant, for the customers. Back in the day, I had to literally take a Word document, type the bullet points on the Word document, grab a brochure, stick it on top of it and send it snail mail. So this is such a nice feature that these portals have nowadays. So I'll go ahead and email this to myself. And I'm going to, you can put whatever you want in here. Okay, looks like Rich has a nice long-winded explanation of the plan right here. Me, here's what I put, but you guys do whatever works best for you. Mr. Jones, here are the plan details that we spoke about. I will call you at the time that we agreed to follow up. I will call you Friday at 2. Thanks, Drew. Send message. Okay, you don't have to put, I mean, you can put a long, nice, you can explain it all in the writing, that's fine, but that's not gonna close the deal. Just tell them, hey, here's the deal, here's everything we talked about. I'm gonna call you on this date. All right. So now my proposal has been sent. Let's take a look at what it looks like when the customer gets it. Okay. Here it is. Customer gets it. Here are the plan details we spoke about. I will call you Friday at 2. Thanks, Drew. They click on it, open it, and they're going to get their quote. All right. Real simple. Now they're looking at it. Okay, $633 is the total premium. Now they might have questions. What is this plan? What is this plan? What is this plan? And you let them know. I'm building it for you to make a great health insurance plan. Hey, what is this plan enhancer AME 5,000 plus? Mr. Jones, remember when I told you that the deductible will be taken care of for you in the event of accidents or injuries or in the event of being hospitalized? Well, that's the benefit that will accomplish that for you. Okay, Mr. Jones, remember when I told you that you'll get a lump sum cash payout in the event of cancer, heart attack, or stroke? This is the benefit that will do that for you. Okay, so don't be afraid to explain it to them and exactly why you did what you did, because you guys are insurance agents, you're the professionals, and you should be building the policies, not the customers, right? Okay, so they want to enroll. Mr. Jones says, you know what? I like it. Sign me up. Okay, so let me go back here to my original quote. Okay, I don't know if I'm going to get my bundle back. I have to redo it. I'll do it quick. Hang on a second. Select the relationship type. Spouse, child. Is that not done? Please select the relationship type. All right, here we go. All right, so let me go ahead and build this bundle like we had it real quick again, and then we'll go through the application, show you guys how that's done. And you'll have another good tool in your tool belt. Okay, 5,000, 100%. Accident plan. AME plus SIP, sickness inpatient. And cancer, heart, stroke, 30,000. By the way, Mr. Jones, did you want dental with that? Did you want a dental plan and a vision plan with that? Yeah, I wouldn't mind that, right? Remember, dental and vision, they're sold like French fries, guys. If you just add, I never include them, and I'm not saying that's the right way to do it. Not saying that at all, because a lot of agents will include it in their initial quote. I never include dental and vision, never. All right, I always just give them the health plan the way that I think it, is the best fit, and then every single person I ask at the end, would you like a dental plan? Would you like a vision plan? 50% will say yes, okay? Now, there's agents out there that probably sell a lot more than 50% of their customers. Probably, 75% of their customers buy dental because they include it. So I'm not saying my way is the right way, whatever you want to do, but that's how I do it. Would you like dental with that? Yes, no, okay, great, no. All right, so we've got the package that we agreed on. We're going to enroll now. Please enter the primary applicant's email address, okay? We're going to be going into the application here in a minute. There we go. All right, so full name, LaToya Jones, social. You start filling it out, guys. All right, real simple. It's not going to let me go on with that social, is it? There we go. Street address, 5700 Memorial Highway, Tampa. Phone number, work phone, email. Is this your mailing address? Yes. Is this your billing address? Yes. What is your preferred spoken language? English. Preferred written language? English. Ethnicity? Who cares? It's not even something that's needed, I don't think. Are you a citizen? Yes. Continue. Okay, my spouse's info, Drew Jones, son, Andy Jones. I was Andy when I was a tyke. I got a little girl named Andy now. All right, so got all my family members in there, socials. I'm not even sure if you need socials on the spouse and dependent. Let's just see if we do. And looks like we don't. So you only need a social for the primary. Looks like you don't need the socials for the spouse and the dependents. If you can get it, but it's not necessary. Beneficiary information. Make me the beneficiary, my wife's the primary. That's for the critical illness policy, the accident management, who to deal with if, God forbid, something happens to the primary and they're no longer with us. Who can we deal with? Who's the beneficiary of these benefits? All right, so here's the health questions. To the best of your knowledge, are you undergoing infertility treatment? No. If they answer yes to any of these questions, they're automatically denied, okay? So they have to answer no to all these questions. Okay, luckily, there's not a whole hell of a lot there, all right? Just read the questions, answer accordingly, okay? Go on to the next one. Beneficiary again, because we're going to be doing a cancer, heart, stroke application now. Questions, cancer, heart, stroke. Okay, go ahead and answer them, ask them, answer them. Should have most of this information up front when you're qualifying them, right? You don't even want to spend your, it's so disheartening for an agent who goes through all the work to close a policy and get to the application and then all of a sudden find out that the customer isn't going to get approved for it. So make sure you get that information up front when you qualify them. Zip code, birth date, any medications, any health concerns that, might lead to me coming up with a different option. All right, so plan confirmation. Yes, I agree. It's, it's not an Affordable Care Act plan. It's not compliant with minimum essential coverages, no pre-existing conditions. All right, that kind of thing. This is two policies blended together to equal your 2-year term. right? So in other words, policy number 1 is going to cancel in 12 months. The new one's going to start in 12 months, right? And you want to make sure that the customers understand. No, it's not going to stop them from getting the plans, trust me. All right, continue. Check here if you're rewriting. So this is for rewrites, okay? Somebody's getting rewritten. You know, if after these 2 years they want to sign up again, I would check here and they'll get, you know, they won't have to pay the new enrollment fee. Continue. Or the life association too, that $20 life association will, they're not going to have them pay for 2 of those. Okay. We got AME questions. Some of them are going to be redundant, guys, you know, so just, you know, try to go through it as quick as possible with your customers. You don't want to get caught, and I've seen agents take, and I'm not exaggerating, I've seen agents take hour and a half, 2 hours on application. Now that might be a marketplace application too with supplements, but guys, you got to do it quick. You got to be quick with people, all right? Everybody's got this go, go, go mentality, all right? So you got to do it quick. All right, guys, so just like anything else, you're going to add the billing information. Natgen does take credit cards, so they definitely have that going for them. Once you click continue, okay, put the billing info in and click continue. Now it's submitted, and it's going to generate the verification. I'm not going to do it now because it's a fake app, but you'll get that verification email. The customer will get the verification email. These verification emails right now, the only time you're going to have a problem with somebody figuring it out is if they're, you know, you sell a customer in their 50s or 60s and they haven't caught on to technology as quick as, you know, as quick as others maybe. But most people are going to be able to look at the email and know exactly what they need to do to verify their benefits and sign their application. All right. Philly uses a DocuSign. I'm not sure what Natgen uses. Natgen? You know, but anyway, they're gonna get a. Once you continue here, you can tell them, okay, Mr. Jones, everything is submitted. You're gonna get an email immediately. It's immediate. You get an immediate email. Let's go ahead and do your online verification together. Do it before you hang up the phone with them. Get it done, because once they do that, now the deal is signed. The deal is closed. Okay. You don't want to, you know, go through all the time of selling a customer, doing the application, sending them the verification, and then hanging up with them. And then, it, you know, life goes on and it slips their mind. In their mind, they might have the health insurance plan, but, you know, they forget to do the online verification. Now their benefits are held up, their plan effective date is held up, and your commissions are held up. All right, so get the application signed. All right, so that's the application though, guys. Very, very simple. All right. You know, when do I sell National General? And again, this is me. Okay, I know some agents, this is their go-to, but you guys know how I feel about Philadelphia American and the benefits that you know, the options that they put out there, and you know, what's available through Philly. So first, my go-to is I'm trying to build the policy with Philly. Right? I believe in the products, I believe in the company. And the benefit levels are rock solid. When do I go Natgen? I will go to Natgen when a customer, you know, has to have a major medical, right? If I can't, let's say I'm selling in Florida and Philadelphia American doesn't have the major medical wrap plans available in Florida, right? So if it becomes a concern for somebody where they just got to have major medical, I'll go National General, right? If the brand name objection comes up and I just can't get them over the hump to do business with Philadelphia American, I might go to National General because I have the brand name of Aetna that I could name drop, right? I got their card comes with an Aetna logo, so I can use Aetna as a brand name, right? And if I'm selling on the marketplace, so that's when I would go to National General when I'm selling a customer who is an off-exchange customer, our customers, self-employed people, right? I'll go to Natgen when they're hung up on having major medical or they're hung up on having a brand name. I'm going to National General. The other time I'm selling National General as a go-to is when I'm doing straight supplements. So if I'm selling a Florida Blue plan on the marketplace or a Molina plan on the marketplace or any marketplace plan for that matter, I am going right to that plan enhancer benefit, which is the AME plus sickness inpatient. I'm adding that to every marketplace plan. I'm getting the critical illness in there. I'm getting the dental in there. So when I'm selling supplements standalone, I go National General. Okay, I think that plan enhancer benefit is the best supplement you can buy with a major med policy. Okay, it's rock solid. So that's when I would sell Natgen. Again, guys, there's some of you, this is going to be your go-to product. All right, and that's fine. Okay, I'm not telling you that the way that I do things is the only way to do things. I would never tell you that because I've seen a lot of agents have tremendous success doing it other ways. Okay, I know some of the top producers for United Healthcare in the business. They go United Healthcare, right? And they make a ton of money doing it. So it's what your belief system is in terms of the products and what what you feel the most comfortable selling to your customers and what makes you sleep the best at night. All right. So guys, that's pretty much it. Like I said, there's going to be some new short-term plans coming out within the next few weeks here. So we're definitely going to get that information out to you guys as soon as possible. I got the list of states that the new plan is approved in. There was about a dozen states, so a handful of states are going to have the new short-term product available. We'll get that information to you. And I think this new short-term it's going to be similar to what it is now, but I think there'll be some copay options, maybe a prescription benefit option, maybe some wellness coverage, so we'll see what they come up with. But guys, right now, any questions that you have, go ahead and unmute yourself and fire away. I'm happy to answer any questions. Remember, this is a recorded training, so I will get this into the AHBT library. And I'm not going to get rid of the old Natgen training. I'm just going to put this one in there in conjunction with. So it's kind of an updated training. But any questions, guys?
Drew, I have a question.
Sure.
On the deductible on the short-term policy, if you're doing a family, is it per person or per family?
It is 3 per family. So it maxes out at 3. Good question. So if you have, 3 people in the example we did, it would be per person. But if I had 6 people in the family, it would stop at 3.
Still not clear there. So let's say the father has a heart attack, and so they've got a $5K deductible. So you're telling me they have to get to $15,000?
No, if the husband hits the deductible, he's done. Mom hits the deductible, she's done. Baby hits the deductible, she's done. Next baby has medical issues, the family's done. So they got to reach 3 people would have to meet the deductible. If only one person has medical concerns, they've only got 1 deductible. They don't have to meet 3.
So it's $5K per person.
$5K per person, up to 3 people in the family.
Up to 3 people.
What else, guys? Any other questions?
So, whenever you're doing the sickness and wellness plan, right? If the deductible's $5K, you're doing the one for $5K.
Yeah, well, so in this example, so Evan asked, are you mirroring the plan enhancer benefit with the deductible? And the answer is, in this situation, that's what we did. But because we had 100% coverage for illnesses, 100% coinsurance. So what you'd want to do is, let's say I had a $5,000 deductible and a 80/20 coinsurance. with a maximum out of pocket of $2,000. So what's my plan out of pocket maximum? It's $7,000, right? So I would sell a plan enhancer with at least a $7,000 benefit. So you want to cover whatever plan enhancer benefit you sell, you want to cover the entire out of pocket maximum on the plan. Is it just makes your presentation stronger, and obviously you're covering your customer better, you know? But to answer your question, every situation is different. Has there been times where I've sold a $7,000 max out of pocket plan and just covered the deductible with the AME? Yeah, you know, but let them know this just covers the deductible. You still could have some out of pocket on your co-insurance. But anyway, but yeah, to answer your question, try to cover all of the out of pocket. What else, guys? Any other questions? No? All right. Okay, cool, guys. So again, this is recorded. I'll get it loaded onto the university. If you're unclear on something or a question pops up in your head, please get with your leaders. You know, these trainings are not built to give you all the information that you would need. So the leaders are not off the hook. You're certainly gonna, you know, have questions to ask your leaders, and they have training responsibilities as well on top of it. So guys, let us know where we can help. The activity is key. Keep the activity going. And it sounds, you know, I'll tell you what though, I see looking at the dialer report, it looks like we're starting to get a lot more activity. Agents are starting to catch on with that thing and get comfortable with it. And hopefully you feel that in your business, because that's what it's going to take in order to get you to the level you want to get to. So everybody who's working hard and is plugged in, I'm very grateful and appreciative for your efforts. Keep going. We're going to build this thing together. And everybody have a great weekend. We'll talk to you next week. All right. Thank you.